Welcome to Wealth Management Mixtape, a go-anywhere show about life, finance, and investing. Join Jake Heisler and Tim Miller as they talk about what they're reading, writing, and experiencing. Jake Heisler and Tim Miller work for Quaker Wealth Management. All opinions expressed by Jake and Tim or any podcast guests are solely their own opinions and do not reflect the opinion of Quaker Wealth Management. This podcast is for informational purposes only and should not be relied upon for investment or financial planning decisions. Clients of Quaker Wealth Management may maintain positions in the securities discussed in this podcast.
This is lucky episode number 13 for us, by the way.
Lucky 13?
You know what I was thinking? I don't know why I was thinking about this, but I was thinking, hey, it's pretty awesome. I use the word awesome. I used to be in this marketing group. This is probably 10 years ago. And this guy, I'm not kidding, he's an insurance guy. And he, either this is genius or ridiculous. Probably genius because I remember it to this day. But you had an opportunity to present to the group, kind of like an extended commercial, like a 10-minute presentation. And his whole presentation was, the only thing he did is he had a big pad of paper, and he had a chart on it, and the chart said, like a graph, and the horizontal axis said time spent with me, and then the x-axis, vertical axis, had awesomeness. It just was a line, and the entire thing was like him. He didn't talk about the company or what he can do. It was just about how awesome he is once you got to know him or something. I think it was like...
What was his job?
I think it was like home insurance or something. Honestly, I don't even know. Something insurance related. So either he's genius and I remember him, but I don't remember his company name or his type of insurance product he was selling. But it was just a graph of nothing to do with his actual product or company or whatever.
What do you think people would rate this show if they made that same graph?
I don't even want to ask. I don't know what would make me think of that, but anyway, this is episode 13, so it's which for us is a pretty big milestone, right? That's like half a year for us because we do it every 2 weeks. So that's pretty cool.
Official 6-month mark?
Yeah, just about. So like always, we always start off with a market economic update or whatever's of interest during these last couple of weeks. The big one is the Fed is out in Jackson Hole, Wyoming. And they're staying at, I looked it up, they're staying at Hotel Terra, which is like a boutique luxury hotel. Looks nice.
You love being tough on the Fed. You think
I think with
they deserve
great power. What's that?
You think they deserve staying there?
I think with great power comes great responsibility, right? And they arguably have more power than anybody else on the market. I don't know if it's deserved or not, but it's better than the Motel 6 or something.
You think they're only deserving the Motel 6 this year with inflation at all-time highs?
Depends what happens on Friday, right? So on Friday they come out and Jerome Powell's going to talk. It's just a presser on Friday. So they don't have an official meeting this week or official decision to make this month. I meant. So he's going to talk about what they talk about, which is either going to be interpreted as hawkish or dovish. Hawkish meaning they're going to raise rates more aggressively. Dovish, the opposite of that. And I was thinking, like, everybody cares about this. Does it really matter all that much in the grand scheme of things? I mean, are they going to raise 75 basis points next month in September, or 50, and what's the major impact from 25 basis points? I don't know.
You think the market is pricing in 75 right now?
That's what it's pricing in now. But I'm starting to hear from folks a lot smarter than me that it could be 50. The surprise would be 50, right? And if you look at any of the leading inflation data right now, it's turning over pretty quickly. CPI is a lagging indicator, so we're all getting that information after the fact. But the leading indicators are all turning over fast. And the Fed's looking at that, right? The Fed's obviously aware of that. They're not looking at CPI. And so I would guess that I was talking to someone else in our office this morning. I was saying, my guess is that there's a little bit of a sell-off that happened in the last few days, the last week or so. And I guess in anticipation of a more hawkish tone, which to me is so ridiculous. But anyway, I wouldn't be surprised if the language is very measured and not really giving anything away, data dependent, that sort of thing. But if he mentions that some of this data looks better, right, that could propel markets forward.
Even if he is hawkish, couldn't he change his tune in a month anyway? So, like, how much weight should investors put on his tone on Friday?
Yeah, your guess is as good as mine. I did a post recently that was traders, stock traders have to watch all these things, right? What the Fed's tone is on Friday, and the impact of interest rates on the dollar, and or inflation on the dollar and interest rates, and what quarterly earnings look like, and earnings revisions look like. The war in Ukraine on the price of energy and other commodities, but investors don't. With a long-term perspective, the only thing really to worry about is, your risk tolerance, your time frame, and your asset allocation, and then move on, right? So it's this is all for traders and short term, and we wanted the market to go up, right? And our people in our world, we appreciate when the market's moving in the right direction, but it's I don't know what's going to happen.
In your LinkedIn post, we want, as you call him, Jerry Powell, to be as monotone as possible, right?
Well, he's got that down, right?
Not give anything away.
He's as level toned as you possibly can be. It's only on the questions, when he gets asked questions, which I think are probably fairly canned, but when he gets questions, he sometimes veers off a little bit. It's in the questions you get a little bit of insight. But I don't think it's look, if it's 75 bips in September or 50 bips in September, and inflation continues to turn over towards the end of the year, more substantial way next year, I mean, I'm not sure what this Friday has to do with that. Honestly, it's a trader. Traders look for the next thing to talk about, right? And then all eyes need to be on CNBC or Bloomberg Television or whatever it is, Fox Business, and so they naturally pick up the next story and talk about it for 2 weeks until they figure out what actually happens, and then tell everybody why they were right or wrong. I thought there was an interesting tweet from Morgan Housel this week, which is, and it actually goes into a topic we're going to touch on a little later on around kind of best practices for financial advisors. But every great investment, his tweet was this: every great investment was once mocked by the crowd, and the crowd's usually right. So it's, I guess to me, I interpret it as you can play it safe and probably be okay, or you can try to be an outlier and probably be wrong, right? But if you're right as an outlier, you're probably going to be immensely successful. That was my interpretation.
Yeah, I think it takes, to kind of be that outlier, you have to go against the grain and have to go against consensus. But you're right. A lot of the outliers are very successful in going into the grain sometimes because they see some things that others don't. And that's where you usually find a big opportunity in any business.
I would say the exception to that tweet is in the world we're in, which is investing. that when the crowd sells and gets really bearish, it tends to be a contrarian indicator, which means it's a good time to buy, and vice versa. So I would say it probably is true in most things, but not when it comes to money.
Interesting.
That was my thought on it. And he had another tweet that I thought was really cool too, which is, and this we talk about this all the time, which is that try to ignore the news and that bad news sells and all that stuff. But he said that lots of overnight tragedies and no overnight miracles. So the headlines are usually bad, even if the slow compounding of good news wins over time. Here's what it made me think of. It made me think of a race, like a marathon. And to be in the top 10% of runners, you have to train like a really long time, right? To have a really good time in a marathon. But like, let's say, there's a 500 people and you finish 40th. Huge accomplishment. I mean, huge accomplishment to be in the top 10%. But let's say you get struck by lightning halfway through the marathon, and there's ambulances and stuff. What's the leading story in the news? Runner struck by lightning. Tim Miller becomes famous for being struck by lightning, and not for his top 10% finish in the previous marathon. So, I mean, that's kind of the point, right? That there's very rarely overnight miracles, and but there's plenty of overnight tragedies, and usually immense success takes time, and work, and effort, and consistency, and that just doesn't sell, right?
And when you translate it to our industry, at least for the way that most advisors structure their practice, investing over the long term, you mean long term, right? So for most folks, it's retirement and trying to outpace indexes or just align with certain clients' risk tolerances. It takes time. And we're not, or any other advisor for that matter, you're not the worst or the best advisor in a 6 or 12 month span, right? The market is going to have volatility, and like for clients of ours who have come in at the start of the year, doesn't mean that we're terrible advisors just because the market's down. But it goes to show that good things come over long periods of time, and it doesn't always get the headlines when it comes to news. A lot of the bad news catches the headlines. It's somewhat drives, we've talked about this on multiple podcasts now, that the talking heads, they need things to talk about for 12 hours a day. And a lot of that is what sells, is, in the market at least, bad news or inflation at all-time highs or geopolitical tensions or any other thing that they can talk about for a couple hours is going to get the attention.
Yeah. There was I think it was on Derek Thompson's podcast this past week, but he had it was all about that. There's this. They kind of pinpointed 2003 was the turning point for people being more negative, and just negativity kind of rising to the top. And it's here was the question that was posed in that, which was, if I tell you I have two pieces of information, right, and you can only choose to hear one, and then so here I'm going to ask you this, right? Which one would you choose? Maybe you're a little too young for this, but one of your friends is getting married, right? Or number two of your friends are getting a divorce. Which one do you want to hear?
Probably want to hear about the divorces.
Yeah. And then you got to be honest, right? Like, which one's actually more interesting? So bad news, the whole point is bad news kind of pound for pound carries more social capital. It's unfortunate but true. And then you have social media kind of mixed into that, and it's so easy to find bad news quickly. And so it's just become this kind of, this hate, this kind of game of who can hate who more, or it's why politics has kind of polarized so much in the last. It feels like in the last 20 years or so, and I don't know how that changes. I don't quite understand.
Yeah, I think there's a lot of polarization around, politics nowadays, and a lot of other things. There's just so many different things seem to be so polarized in one way or another. And you're right. I don't know how you change some of those things or how there is common ground in certain situations, but that's what everybody hopes for, right? It's just it's tough to figure out how to get there.
There's a Derek Thompson also in previous podcasts will recommend his podcast as long as he recommends ours.
We got to get him on the show.
Yeah, I'm sure he's plenty of time. He writes for The Atlantic, too. Anyway. This is my interpretation of some of it. It was, we know bad news sells. You already mentioned that. It also rises at the top of any social media algorithm, right? More clicks, more money. So people, if you live through the computer screen, right, your automatic experience with the world is negative, right? This sucks. This person's awful. I hate whoever. My friend got divorced. Whatever it is. So we're so hyper aware of what people dislike that we just assume that's how everybody feels. So his thing is everything sucks, but I'm okay, right? So if you ask somebody, how's the world doing? It's probably like, that's pretty shitty. But when you get asked, how are you doing? I'm okay. I'm fine. So it's this, it makes everybody perceive the world through this kind of negative lens, when in reality you're doing okay. And so I don't know how that affects people over time. I got to imagine there's a long-term psychological impact that we just haven't really picked up on yet. Maybe it's suicides or I don't know. I don't know how it unfolds in society.
You mentioned 2003 like as a turning point. Like, what was it about 2003 that kind of changed this dynamic? Was it the creation of certain technologies? Obviously, later on came social medias, but like, what fueled that turning point in 2003? Do you have any idea?
I think it was the Jersey Shore. It was something like, I can't remember what it was, but it was something like reality based, I think. Like, you put these people on camera. I'm using the Jersey Shore as an example. And people watch to hate, right? They're like so ridiculous that you're like, I would never hang out with these people. Well, maybe some people think the other way, but that you're watching for the train wreck, right? For Snooki to like fall down drunk or get in a fight with whoever else is on that show.
That show created like the worst stigma for everybody who lives in New Jersey.
Well, to be fair, Seaside, I think they were in Seaside Heights. It's a little, it's not as polished as Stone Harbor, right? So, but no, I think it had something to do with that, actually, Tim. I think it was more around, your access. It was when the turning of programming became more about hating something. It wasn't when the Kardashians came out, but it's a similar idea, right? You watch them
just like pure access to information and speed of information.
Yeah, and then it's easy to find a following that has a similar feeling, and then because the media picks up on this, they start to have stories about it that reinforce the negativity, and it just snowballs over time. And now we've got to a point where everything is so polarized. You either have to love something or hate something. You can't. There's not really a middle ground to it anymore. Which is actually not how people really feel, but it's how the world is perceived through the news or through social media. I lump them all in the same category at this point. That the news is just, most news outlets are just a reflection of social media rankings, right? Because they have to get eyeballs on the screen.
Yeah, absolutely. It's all about how many viewers you can get to your post, to your news outlet, or anything you're trying to put out there. It's all how many viewers and eyeballs you can get on it.
figured we'd talk about student loans a little bit.
Yeah.
Because
Biden administration finally kept his campaign promise and actually came through with some student loan forgiveness. Is that right? So he forgave up to $10,000 for those who earned under $125,000. Is that correct?
Right.
And
then if you're married, then you just double that, right? So it could be $20,000 for $250,000, as long as you both have student loans. And then the last thing was you haven't had to make payments on your student loans for some time now, and that was extended again, I think one final time through the end of 2022.
Yeah, and before the show, my question to you was, what is the effect, if any, on like inflation, or like what is the effect from here, if any, at all? Now you have, or not even inflation, but like just financial impact on families. So two ways to look at it, at least from my perspective, is now you have more discretionary income to go spend somewhere else. But what are those people going to do with that income? Are they going to start saving that money? Are they going to pay down other debts with that money? Are they going to go out and spend more money on discretionary items? Like, what is it that they're going to now reallocate that cash flow and that funds that they were saving, hopefully, to pay off these loans and redirecting them? I don't know. At least in our world, and we would deal with a lot of folks who are nearing retirement or already retired and helping out children with loan payments, and it can improve their lifestyle if they're already retired by increasing their monthly cash flow, or for those who are nearing retirement and see helping out their kids' student loans as a burden to getting to that retirement date, it now starts to speed up that timeline to retirement. So that's just a couple things I initially thought about as it relates to conversations that we have on a daily basis, or things that we see on the news on a daily basis when it comes to the headline right now, which is inflation. So I don't know how much of an impact, if at all, it will have on inflation or where those funds will be redirected. But I guess time will tell.
I would say no impact on inflation. I think that not having to make student loan payments has already been baked in. It's been the case for a long time, and extending it another 4 or 5 months is not going to make a big deal. Make a big difference. It could have an impact come January. I mean, if there's these loan payments are in some cases substantial, right? So that has to get pulled from savings or spending over to the loan payments. That could have an impact in January. I could see that. I think though your second part of that point was there's two cohorts. There's one who cares about their finances and the one that doesn't, right? So in our world, we know we work with people that are financially responsible and would take that extra cash flow and save it, or at least be more responsible with it, right? But I would say the vast majority of Americans are going to spend that money. That's getting spent. So, I mean, it has gotten spent. It has been spent, and it will be spent. I mean, the only upside to this is those student loan payments run out sooner, right? So then the next question is, what do they do with that extra cash flow when all the loans are paid off? Probably spend it, right? We've gone through this past year, for example, 2022, and no student loan payments, and credit card balances have gone up. Okay, that's not going to change it's going to go up more, I would think, when they have to resume their loan payments because they have to maintain a lifestyle and I don't know. I think student loans are a big problem. I don't know the way to fix it. I mean, it has to come back down to reining in college costs, and I don't know how that happens. There's got to be a dynamic shift in how we value education or how education is structured for this all to change. But it's not sustainable. There's just if you carry a loan beyond school and it's 8%, but you're in a starting salary of $50,000. It's so tough to pay that down. In a lot of cases, that interest is outweighing your minimum payment. So year ends and you've actually your loan has grown. It hasn't gone down at all. It's just a tough tough problem. I don't know if this is the answer or not. I would argue it's not, but
Do you think that $10,000 is enough to really make an impact?
I don't know how many billions it ends up being, but yeah, it puts a dent in it. The question though is, does this change the behavior of the pricing of college in the future and or lenders to lend?
I have no idea.
Yeah, probably not. I mean, I would guess no. Like, is what's your alma mater?
LaSalle,
LaSalle.
Philadelphia.
Was LaSalle reducing their tuition next year? No.
Not that I know of.
I mean, no.
It'd be great for future generations of college kids, but like my thought process is like, what else does it affect? Like, you know, if they're going to put this through, obviously it gives some relief now, but you're right. Does it go back to the cost of tuition, or like, what are we really getting at the root of the problem? Are we just giving short-term relief to an issue, or are we actually digging to the root of a problem? And like, what do they see as a long-term benefit of canceling $10,000 of student loans per borrower under $125,000? Like,
well, there's something happening in November here.
that is a big reason.
So, you know, keep that in the back of your mind. This whole topic makes me angry. As a parent, I understand the parent's dilemma. It's a child wants to go to a really good school. You want to support your child's vision, but you also want to help your child make a responsible financial decision for their future. And if it costs $80,000 a year to go to a school, is there really a value proposition above a school that you pay $40,000 for or $25,000 for a year? And I really think there should be a mandate for student loans that if you decide to go to that school, whatever school, let's say $80,000, it's $80,000 a year. You have no scholarship, you have no grants, there's no work study. It's just $80,000 a year. It ends up being $320,000 when you're out of school, right? That there should be a mandatory service or counseling service that walks you through what that looks like from a cash flow standpoint and says, in your desired field of study, let's say it's, you know, a bachelor's of the arts and economics or whatever, the average salary coming out of school is $55,000, and your payment's going to be $2,000 a month. Like, you're only going to have X amount of money left over to live the life you want to live. Here's the average car payment. Here's the average rent payment. Here's the average food cost. Here's your average gas expense. And just show them that they're going to be, they're not going to be able to sustain any lifestyle doing that. You're carrying a mortgage out of school.
And a lot of those great schools, it seems like the really expensive schools, there are a lot of, you know, English or art majors, or, you know, and they don't really understand the impact of what that loan payment is going to look like. The other thing to that is, like, how many high schools, like, graduates actually know exactly what they want to do day one of college, though?
Well, that's even more of my point, right? Why go to an $80,000 a year school? Like, the diploma on my wall is no different from the diploma on yours. And I suppose if you go to Harvard or Yale or Stanford or MIT or these types of schools, that there is an advantage there. Though I would argue you'd pay much less there because of the endowments that are associated with those schools on a per year basis. We get caught up in Bucknell being better than Gettysburg, being better than LaSalle, being better than Widener, being, you know, on and on and on. But the reality is, with a degree, it ends up being on you to make your career a career out of it. It doesn't have anything to do with a diploma on the wall. And it's fun to talk about in the beginning, and it's part of the interview process with most of these kids coming out of school. But, you know, the business you've built is has nothing to do with your degree, I would argue. And same thing on my side. But to me, it's like a social social boot camp, is what college is. That's what it is.
Yeah, you have to do it.
You have it's and it's your choice to do it or not. So you have. There's no parent waking you up for class, right? You got to do it on your own. You've got to set your study schedule. You got to prepare for the exams. It's all on you. And if you don't do it, you're gonna fail, or you're gonna do poorly. And you learn how to balance your social world with your academic world. So for that reason, and your skills on both sides, that reason I think it's really valuable. I'm not sure it's worth a mortgage when you come out of school. So I think that the takeaway for me, even though we started with student loan forgiveness, is if you're a parent, you have to be open to having this conversation. And you have to explain that when school's done and you have this payment coming in, it's going to impact your lifestyle. You think of you're on your own and making a lot of money now, and you're going to have a nice car and stuff. You're not with these loans. So I think it's a caution to parents, or an encouragement of parents, to have a conversation about student loans and have a real conversation. I think there should be a mandatory thing going on there, not with a parent, but with if you're a student loan or a lender, there should be some sort of course or whatever.
I think I was one of the lucky ones who had parents when I was 18 years old who actually sat me down and looked through the schools that I got accepted to, and some being more expensive than others, and then just looking at where I got money at certain schools and how my parents, I'm lucky enough to have parents who would help support me, in college, and looking at, either way I was going to have some sort of loan coming out of college, but they're saying, if you go to this school, this is what it's going to most likely cost coming out, with everything associated with, there's a lot of extra expenses that come in with housing and books and all these other costs they have to take into account. So I think it was the best decision I made to go where I did at age 18, and I looked at a couple other schools in the area that I got accepted to, and I think the loan payments, I'd probably still be paying them off. I finished paying them off a few years ago, and I did the math, and I think it would have been triple the amount had I gone to a different school, both of them in Philadelphia. And you're right, I don't think that degree holds enough weight to have that much of a difference in loan repayment.
How would that have affected, let's say you went to the more expensive school, the industry would you have taken the risk?
It's funny because, so both schools are in Philadelphia. I went to LaSalle. The other school I'm referencing is St. Joe's. Got into both. And I looked at the cost of tuition. I don't think it would have changed the industry, because I knew kind of since sophomore year I wanted to go into wealth management. And funny enough, I actually worked at a firm where I worked with multiple folks who went to St. Joe's. So yeah. I'm working at a company where they went to they're working at the same company that I'm working at, and I paid probably a third of what they paid for school. So in hindsight, it was one of the best decisions I've ever made.
Yeah. And I think that these days there's just more access when you come out of school for, it used to be Silicon Valley where all the startups were, right? So you come out of school, you can get a job, you can rise really quickly through the ranks. Your degree mattered somewhat depending upon the type of work you were doing. Obviously, if you were a computer engineer or software engineer, you had to have some background skills, coding and that sort of thing. But these days, there's startups everywhere, right? So you can get on the ground floor in these companies in Philadelphia, obviously New York, D.C., Atlanta. It's all over the place. Now, definitely down in Miami. So it just, I think there needs to be a process in place. And I know we try to share it with our clients, but a process in place that helps people understand that the degree on the wall has little to do with your future success. but so much time and energy is spent on finding the right school. You know, and most of these folks don't have any idea what they like. Myself, I started as a biology major, and then ended up being an economics major. So I had no idea what I was going to do, you know, my senior year in high school. So it was all I interned at a physical therapy office, and then I watched I remember watching hip surgery. You know, was like an orthopedic surgeon too. At an orthopedic surgeon surgery center. So and now I have a financial advisor. So you never know.
I think
it's the social skills that I think are most important, and the self-discipline. Let's stop there. That was good.
Okay.
We can talk about our other topic on the next.
Go into best practices on the next episode.
Yeah. Are you watching anything on TV that is worth talking about?
So I've talked about it before, but I actually just watched the, I guess, to date series finale for Yellowstone last night.
All right. What do you think?
I liked it. I think they're coming out with another season in the next couple of months. I don't know if you know any more about that. I don't know the release date, but I think they are coming out with season 5, is it? But I liked it. I
didn't mind it. Yeah, I just there's too many musical interludes in there. So it was a little silly to me. It became like a running joke to my wife and I. I'll wait till the next interlude to go to the bathroom or something. It was still good. We'll watch the next season, but it's that was really obvious that they were filling space with a country song or a scene where they're it's just horse wrangling or whatever.
I think it got a little unrealistic at certain points. Like the main characters are always intact no matter what happens, and that's a little bit of a spoiler, I guess. But I mean, I do like it. I'm going to continue watching it. I've gotten a couple recommendations for the next show. I think one of them's called Severance.
Oh, yeah, I'm watching that right now.
Okay.
Yeah.
Severance. Maybe that came from you. I can't remember.
No, it wasn't me. I didn't mention it. We just started it. It's really cool. So I always judge shows by how excited am I to watch the next episode, like during the day. Like it's something that I look forward to. And it's a weird show, but it's a cool concept. You know the concept?
I do not. I watched a 30-second trailer.
I'll tell you the concept. It's cool. It's a procedure that separates your work life from your social life, from your other life. And this guy, one of the main characters, gets it because his wife had died, and he couldn't bear the thought of her, or dealing with his emotions. And so he thought, okay, for 8 hours a day, I don't have to think about it. I'm off in my work life. But it creates this two separate versions of the person, where one's work life guy and the other one's regular life guy, and they start to kind of eventually intertwine, and it's pretty cool, but it's goofy too. So it's like a little artsy, but it's when you get to like the 6th episode, I think it's 5th or 6th, 4th or 5th maybe. There's like a moment where you're like, oh, this is a great show. Like this is such a cool concept. So I'm watching that one, and I liked also on Apple. I think it's Apple TV. Also on Apple TV is Blackbird.
I have heard of that.
Yeah, based on a true story. A guy was in jail. He was tasked with transferring to a different jail to elicit a confession out of a serial killer. And he has to befriend him, and then the serial killer, the character, and the actor who plays a serial killer, is so creepy but good, and it was a pretty good. I think it's 6 episodes, and that's it. There's a finale. It'll never be a season 2, and it was based on a true story.
It's only 6 episodes?
Yeah, 6 one-hour episodes.
Okay. And then the other docu series, kind of similar, I think it's 6 episodes as well, is the Captain, the one on Derek Jeter. I think.
Yeah. I haven't. Have you watched that?
I have not watched it yet, but that is on my list. It seems similar to Last Chance.
Yeah, I'd like to watch it. but it's not a. My wife and I have this window of opportunity. I've talked about it before. It's like 8:30 to 10 p.m. and there's no way I'm going to convince her to watch Derek Jeter docu series. Not going to happen.
Yeah, you might have to do that in your time to yourself if you have any.
Yeah, I was going to say, when is that, Tim?
7:30 in the morning, maybe. I have no idea.
I'm not going to wake up early to watch Derek Jeter on TV. Cool. Let's stop it there and see everyone again soon.